Good morning, Adelaide. My name is Con, and I am the conversationalist in this special edition. And yes, I still have my latte in tow. Look, it's a special edition, and I've wanted to bring an expert on board here this morning. Housing affordability is definitely a really hot topic at the moment, and you chuck in the federal government Homebuilder Scheme, and there's some fairly hot debate raging. My guest this morning is Daniel Baxter, and Daniel is one of the co-founders of First Home Buyer Buddy. And Daniel specialises in property marketing and education. And as part of this market education, he's hosted Australia's 3 largest first home buyer masterclasses. Daniel works closely with leading building, property and finance specialists to attract, educate and convert more of their ideal prospects into clients. Good morning, Daniel. How are you?
Very well, thank you, Con. Appreciate you having me on.
No, mate, thank you very much. It's really appreciate your time. And as I said, when we touched base originally, it's definitely very, very topical. And typically when the government releases any kind of policy in any environment, there's always, a fair share of criticism and indeed positive as well. So we just wanted to have a bit of a chat, mate. First of all, before we get into the nuts and bolts, tell us a little bit about First Home Buyer Buddy and how it was developed and how it was born.
Yeah, thank you, Con. Well, originally my background's real estate, so we've had our own selling agencies, buyers agencies, and we've always operated, I guess, in a bit different field to a lot of those guys, just different business model, predominantly online, working nationally rather than just locally, which exposed me to a lot of different markets, I guess, early on. And what we realized once we we always had this belief that when we were just selling normal property as like your local real estate agent would, it never made sense to me just to help people sell and get a great result. I was like, well, why do I only help them with that part? Why shouldn't I help them get a great result when they buy as well? So we would sort of help people, not only sell, but also purchase their home. So they basically, the holistic experience that they received was one where, they made as much money as possible, to be able to move forward. But what we noticed once we realized we actually really liked that buyer's side, the buyer's agency side, we started working with more of those clients and doing more marketing. We had a lot of first home buyers coming to us for help. But what we realized was that particular business model, it's not really conducive to first home buyers being able to use it. Our expensive or our service was, quite expensive for those guys when housing affordability is just so hard to even begin with, or to get to. So we realized, well, pretty early on that to be able to help all those first home buyers, we either actually just had to say no to them like most people, or we had to develop something new. So basically what we did was, we thought we really like working with these guys. We know that they need more help than the average person. So we developed some, online education programs, that we built. We run, our seminars, as you touched on. We've run those sort of through different parts of Australia, run Australia's 3 biggest ones. And we sort of tie all of that education into now helping, different companies who service and I guess sell to that market, create a better experience for those people so that they can do more business with them.
Okay. So your service really is, as you mentioned, quite a holistic approach in terms of you're working with, the developers, the financiers to ensure that they're attracting their ideal client, but at the same time, you're educating and helping the prospective purchaser to make sure that they're getting the best deal that they can get, but also in terms of potential pitfalls in building in general, but certainly for the first home buyer, they would be experiences they would not be normally in touch with. Is that right?
Yeah, basically our whole, thought process is rather than, most people take the approach if they're, trying to, whatever it is, work, whether it's finance brokers, builders, developers, whatever it is, they just, essentially their job is to sell to those clients, to sell their service to those clients. And, that's 100% fine. And that's obviously, what they need to be doing to be working with those clients. We're all a business. Whereas our approach is, yeah, we need to do that. But also what we really need to do is make sure that that whole experience for the client isn't just about selling to them. The world's changed. People want more value. They need more value. They want to feel that, you're actually on their side. So we're just trying to bring more of the elements that maybe they don't get from, the average, marketing strategy, whatever it might be, to deliver a better customer experience, which then in turn means our clients get a better result as well. You know, that they have more meaningful conversations, and that obviously turns into them generating more business.
Yeah, great. Mate, look, you touched on housing affordability in your comments earlier. Numbers that come out of the government, or indeed any department, can certainly be construed and supported and/or not supported in many ways. You know, it depends how you want to look at the numbers. But certainly one thing that is quite common in terms of dialogue is that the housing affordability, the gap between wages and housing prices is widening. And over the last 10 years, certainly some numbers that I've seen, it's widening at a fairly significant rate. What are your thoughts or comments behind that?
It's, you know what, that's absolutely true. It's a really tough one for people to be able to jump into the market. You know, I think back to when I bought my first home, I think it was maybe 2004, 2005. You know, I spent $500,000 on that home, and I thought that was huge, right? I was like, I was in Sydney, and I was like, oh, geez, that's a lot of money. And you know, these days, you know, we help people who are, in all honesty, I think probably in not as strong as financial position as I was even back then. And they're spending $750,000 on a first home, you know, on a house and land package in Sydney and things like that. And, you know, that's crazy, right? It's such a huge mortgage. You know, when you don't have that backing to be able to do that, it's a huge commitment. And it's not only just, you know, the commitment that, you know, that's one part of it. It's just, it's a lot of money out of their, you know, their weekly wage. It's just going to support that mortgage. And it's really tough to get started, right? You know, like saving a deposit, really hard, particularly in Sydney, you know, Australia's most expensive market. You know, Melbourne's not far behind. Certainly some more affordability in some of the other states. You know, South Australia represents pretty good value for first home buyers. What's out there, but then, you know, some of the other exemptions maybe not as good as some of the other states. So they all sort of tend to even out in the end. But yeah, it's really hard. It's you know, to know if there's a solution to that, you know, home affordability. It's unfortunately there's, you know, a lot of agendas here and there driving it. You know, and everybody, you know, essentially, you know, the people who are building the properties and developers, obviously, you know, their whole business is based on, you know, making money and generating sales, and that's how all of our businesses are. But on the flip side, yeah, you've got people whose wages, you know, are making it really tough to get up that number or get up to those numbers that they need to be able to do it. And yeah, you know, wages aren't rising either. You know, sometimes, you know, different just to give you a bit of an idea, you know, different marketing that we do for certain clients, you know, to be able to afford their properties, which are, you know, by no means what I would class as, you know, expensive luxury properties. They're entry-level properties for people to get in the first home buyer market. You know, serviceability levels means that that person needs to be maybe earning a minimum $70,000 a year.
Wow.
You know, to be able to get into it. And, you know, for some people, you know, a lot of people go, oh yeah, you know, that's okay. But, you know, we get a lot of people that feels like it's a world away, you know, to be at $70,000 a year. They probably feel like they may not ever get to that number. And that can be really disheartening, you know, for us as well, because I really feel for them, because I know they're trying hard. They're trying to save as much money as they can. And even if they save a good deposit, the banks with their serviceability levels just won't lend them the money to do it. And that can be, you know, pretty heartbreaking for people.
While we're on the financial institutions, and it certainly wasn't something that we spoke about earlier, but I'm just curious, with the conversations that you've had and your experience with your clients, are you finding that financial institutions are tightening in terms of their lending criteria, particularly more so now with this COVID thing going on?
Oh, look, absolutely. You know, we've had so many clients who, you know, pre-COVID, ready to buy, you know, we've basically got everything signed off, ready to help them, you know, with a lot of our clients as well. And then the deal's fallen over for them. And obviously that's disappointing for everybody involved. You know, nobody's happy with it. You know, the banks aren't happy with it either, obviously. But it's just what, you know, they need to obviously be looking at it. And it's fair enough too, you know, they need to make sure that people can afford these mortgages. Obviously they've got a huge duty of care as well. You know, no good for the first home buyer. You know, their dream of what they thought was happening is, you know, now in some ways maybe been crushed, or at least put on hold for, you know, for maybe 6 months. But maybe, you know, it might even be, you know, the end of it, depending if they lost their job, or, how long maybe they're on the reduced wages or something like that. And obviously for the builders and developers, it's, held up everything as well. They're unable to move forward, which is part of this, reason for this, whole new stimulus. So.
And I'll get onto the stimulus in a moment, but just one more question. One of the comments that I've seen thrown around is that with obviously builders in particular, they had a certain amount of work which was funded prior to COVID, so they've still kept busy building those completed projects. But as those projects end, there's suggestion that there'll be a significant decline in construction because there's no new work coming on. Is that what you're seeing? Is that what your view?
Yeah, exactly right. I mean, all the builds they're doing now are builds that happen, that they secured probably 3, 6, 9 months ago. This is why, you still see them out there building. People probably think, they haven't been affected, but the 3 months leading up to COVID, there's probably, from all the conversations I've had with builders and developers, there's probably very few of them that will make any profit this year. Based on their overheads, what they're doing, their holding costs, staff, whatever it might be. There's probably very few, that will be profitable for this year. That's pretty scary, right? Because they're big businesses with big overheads, a lot of history behind a lot of them as well. So, there's probably, so there's 3 months prior, basically, minimal sales done. And then we'll probably, you'll probably see this for the next 6 months where there's going to be reduced builds. They're not going to be as many, houses on the ground. There's this hold up period. And obviously the stimulus has been good to try and push that and at least build some momentum pretty quickly. But there will still be that gap of where there's a lack of homes being built, without doubt. So which is we still don't know what that's going to look like. Some people are more positive than others. Like in all things. So it'll just be interesting. But it wouldn't surprise me that if we do see that drop of builds in the next sort of maybe 3 to 6 months, maybe even 9 in some areas. But then after that, it'll probably be game on because all this, with all these builds getting locked in now in the next 6 months, and then probably starting, whether they start sort of in the next 3, 4 months, and then or even early next year.
Mate, let's we'll start off with I guess a little bit of negativity surrounding this the Homebuilder Scheme. There's an article written by Shannon Malloy for news.com.au, and it says Scott Morrison's Homebuilder Scheme is meant to save jobs, but experts have slammed the plan as little more than a way for the rich to get richer. It goes on to say, a gentleman by the name of Jeff Hanmer, who is adjunct professor of architecture at Adelaide Uni, it is possibly the most complex and least equitable program the government could have devised to deliver construction jobs. He goes on to say, it's a way of making people who are reasonably well off richer. It might build more nice decks for sipping Chardonnay, most already planned, and it might deliver ritzy new bathrooms with imported taps and so on, but it won't help those suffering housing stress. And there's a fair bit of additional negativity regards the program in that. And as I said to you, I'm not surprised that there's always criticism for every government initiative. What are your general comments around those negative thoughts that I've just mentioned?
Yeah, look, it's always that thing, right? You're never going to please anyone. Look, if I had my way, I'd probably change certain things, with how the thing's structured, how funds could be released to help more people and stuff like that as well. We'd all love to have our opinion, but the truth is you're never going to please everyone. I think the really exciting thing is, like, in all honesty, this is a huge deal, right? You think about how long or how much work went into getting this, basically passed so quickly so that we can get the construction industry back on track. What a lot of these guys fail to, sure, it might do this for that person or someone gets a bit of an advantage here, but at least they're doing something, right? There's something happening. The construction industry employs 1 in 11 people in Australia.
Wow. Okay.
Right. So 1 in 11 people are going to, hopefully be, feel secure in their employment because of things like this happening. So, these are the things they're not mentioning, right? What positivity it's going to bring, certainly to, to the construction industry, people, their lives and stuff like that. And obviously the whole boost in the economy as well, because of all these great things happening. As far as their comments, they'll probably aimed more around the renovation side of this home builder boost. Obviously $150,000 on renos, you can, then obviously claim back $25,000 regarding this builder boost or this home builder grant. And yeah, look, it's the 150K, in some ways I agree, right? 150K is, pretty big damn reno. And so the people who are affording a $150,000 reno, you know what, they probably are doing okay, because, that's a big chunk of cash to be dropping on a reno. But at the same time, it doesn't really go that far either. If you've ever renovated, you know that, you don't get missed when it comes to the cost. So look, yes and no. I agree with some of what they're saying, but, at the same time, I don't think it's aimed at the renovation side. Yeah, it'll keep the local tradies and stuff in there, but which is going to be a good thing. But a lot of it is more aimed around, well, how can we actually build the construction industry and maybe that new home industry, considering that is the bigger employee of people.
One of the things that I've noticed regards some of the criteria is that house and land packages need to be 750 or under.
Yep.
So you look at some of the other states. I mean, South Australia, you go out 15, 20, 25 Ks north and south, and you're probably looking at about $500,000 for a decent house and land package, which is okay. I would have thought that markets such as Melbourne and Sydney, trying to get a house and land package for 750K wouldn't be that easy, or am I wrong in that area?
Melbourne, yeah, look, there's still really good buying in Melbourne, in comparison to probably Sydney, that's for sure. You still get properties, probably around 500, even less in some areas, just above as well. I think there's still pretty good buying in Melbourne. Sydney's definitely a much tougher market. You probably, you might get the odd, packages here and there. If you're looking at house and land, maybe under 700,000, there's not a whole lot available. You're probably then looking more at maybe your townhouses and stuff like that. 750 is probably, around that 7 to 750 is probably more around that first home buyers. Obviously want to keep it around that to reduce stamp duty and stuff like that as well. So there's certain advantages for keeping it, the dollars at that, or at least under that. So look, there is buying around it, but there's, it just depends. There's not always a lot of choice, right? So people have to be willing to say, well, you know what, I'm happy to sacrifice, maybe everything I want just to be able to get into the market.
To get into the market, exactly.
And the truth is, what, we all probably did that, but the difference is, it's just the way people are. Everybody wants everything, now. It's just the nature. It's because we get delivered everything, in 2 seconds. We want it, and that just translates to the rest of our life. Whereas, I was just happy to get into and buy a bloody home. I was like, if it was even within the area I wanted to live, I was like, that's even better.
That's even better, yeah. And you weren't overly fussed that it didn't have a stone top kitchen bench.
Oh, mate, the home I bought was a dump. I ended up spending about $100,000 on renos. I thought I'd probably spend 15. So
I was going to say, yeah, absolutely. When you do renos, whatever number you're thinking, you better add a few zeros on there, because
that's it. Times it by 10.
Exactly. Mate, we'll talk Sydney, particularly at the minute. And again, one of the other criteria is that the redevelopment of a property, or the renos, the property can't exceed 1.5 million. And of course, what they're suggesting is that, given the Sydney market, anybody that's in a position to probably spend 150K their property value is going to exceed 1.5. So there's a fair chunk of people that are going to miss out in that area as well. So is that something that you agree with, or?
No, not really. I mean, look, like I was saying, I personally think it's really easy to drop 150 grand on renos. I know, because I've spent, I've done lots of renovations myself. I know how easy it is to spend money on them. And look, if you've got a property, in Sydney, a lot of those, it's one of those things. A lot of these people might have bought their home if they bought within maybe the last, 6-7 years, they might have bought it for 800. Maybe now it's worth 1.2, 1.3. That's not their fault, good on them. They purchased the home, they've been paying the mortgage and the interest all these years. And if they've got an opportunity now to spend $150,000 on those homes, which wouldn't be, what you would say is, basically overspending on that type of renovation. It's probably fair for that type of property value. It makes sense. So, I don't think it's something that is just, for people who, these people, I think the thing is to remember, these people now, a lot of these people in Sydney might have a home worth around 1.5, but they didn't buy that home worth 1.5. A lot of these people, they probably bought that home for 600,000 or 700,000. So they're only really, when we're talking about, their financial position is they're only really capable of paying a $700,000 or $800,000 mortgage, not a 1.5. Yeah. So this is what, something that isn't explained to people. They just think, oh, they've got a 1.5 million house, they're rich.
Yep.
But it's not often the case, especially if they've got kids, they've got all these things. So, I think sometimes people just like to point out the things they want to point out.
Mate, that is absolutely correct. I could not agree with you more. And in fact, I don't comment very much on social media when people start going on their little rants, particularly when it's politically motivated or whatever. But, a recent comment, which, particularly coming out of this guy's article here, where it's targeting or helping only the wealthy and the wealthy will get wealthier. Mate, I know people who are in the process of building and, they're in a fortunate position where they can, they can do that, but they're working 2 and 3 jobs. They're not rich by any stretch of the imagination. And I think it's really, really unfair that some of these articles and some of these commentaries do this broad brush painting that, 25 grand, only the wealthy will benefit from it. And that is so not the case.
No, and that's it. And look, anyone who thinks someone who's wealthy will benefit from 25 grand, come on. Like, honestly, if you're wealthy, 25 grand isn't going to be something that really benefits you. It's not going to make a huge difference to your life. Yeah, it might be a nice little bonus to get started. What this is, it's just about getting people on the renovations. It's just about getting people to put that to start that reno that they were maybe going to do in 6 months or a year, and start it now to boost the economy. That's all it's about. It's like, get started with the damn thing now. And if you do, we're going to incentivize you to do it, so that we can get this post-COVID world back on track, as quickly as possible. That's my thought process on it. Yeah, look, maybe it's helping some people who it shouldn't help. That is every policy or every government initiative in Australia. If you can find me one that doesn't do that, you know what? Hit me over the head with it.
I couldn't agree more. And that's a conversation that we could have for 4 hours.
Absolutely.
And as we said earlier, these commentators and people will find whatever information to support their perspective, and there's absolutely no, it's not subjective in any way, shape, or form. Mate, one other thing I just want to raise regards this is one of the conditions which I was speaking to a finance broker the other day, and the funds are only available if you sign so you have to make your first payment from 3 months from signing that building contract.
Yep.
Now, that's not a long time, when you consider, there could be delays in whatever. So what do you reckon about that? Where, is that something that they should have looked at extending?
Yeah, look, I think this is one of what I perceive to be one of the flaws. And it's not, this isn't just my opinion. I've got lots of clients who are builders, they're all, it feels like this is one of those things where, the concept of the idea is really good. What they're doing to stimulate the economy is great, but they probably didn't talk to enough people who are in this game, when they came up with that. So look, in my opinion, I wouldn't be surprised if they make some adjustments to that particular part of this stimulus package, saying, because it's one of those things, it's like 3 months isn't long, because if land hasn't titled, or even if it has titled and then it's got to go through the process, or finance gets delayed, which is there's massive backlog of finance delays at the moment. So there's lots of things that pushes what people think, 3 months, that's not long at all. It can push that out. Exactly right. But there's different ways, like always, there's always different ways that they feel like they'll be able to satisfy those needs, as far as having a construction point started. It just probably varies as far as what's going to count as far as the tick and flick goes on forms or whatever it is to be able to say construction started. It might end up just being them having to put a temporary fencing outside. Who knows? I don't know exactly what it might be, but Yeah, I mean, the thing is as well, though, if it doesn't get off the ground and people have relied on this $25,000 boost, as part of that process to get them over the line, they probably have to make, and that's where the finance broker that they're working with is really important. They have to make allowances, say, guys, look, you need to understand, if this doesn't happen, this is what is going to be the consequences if you can't, if we don't get on the ground or you can't get this $25,000, so that, they at least go into it, with a clear idea of exactly, the pros and cons of, how this will work.
Mm. With that, we'll call it the application process in terms of applying. Yep. It's done through the government, the local government departments. Is that correct? So in South Australia,
yeah,
the Revenue USA, I believe.
I've got some of that. I thought I'd bring up just in case I needed to reference any of it, how it's.
And who actually applies for it, Daniel? Is it the building contractor? Is it the consumer? Is it the client? Is it the bank? Who actually lodges the claim for that 25K?
I'm almost certain it's the lender. So basically, once this is applied, so the broker's obviously going through to getting everything sorted for the client, making sure they're in position, obviously, to claim it, that they meet the criteria. I believe it comes through. Is what happens is once they make first construction payment, I believe that's when the lender will apply to the government to have that money released, I think, back to the client.
Okay. What if there's no lender involved? So let's assume let's assume that a client, for whatever reason, actually is in a cash position.
Yep.
How would they then go? Any ideas?
I would say I would imagine you can just probably apply individually online. Right. I would say it's generally just applied through the lenders, because it's going to form part of that loan application process to be able for them to basically go, yes, this person is approved. So in that case, I would say, yeah, mate, I haven't even looked at that scenario.
No, it's all right. Sorry to put you on the spot.
First home buyer who hasn't had some type of loan. So, but I'm sure there's some out there. Maybe they've got an inheritance or something. So.
Well, and look, I guess I was referencing it more from non-first home buyers. You're right. If there's a first home buyer out there who's in a cash position, I'd suggest it's probably, an inheritance or a lotto or something like that, and good luck to them on that. But for somebody that's doing a renovation or something like that.
Yeah, in all honesty, I haven't really looked at it, but I would imagine just if you go to, the Homebuilder, there's a really good, the government's got obviously a part of that site now dedicated to the Homebuilder grant. Okay. Go there, all the information, if anybody needs any information, there's a couple of PDF downloads that are really, really helpful. Actually, they've done them quite well. They're reasonably easy to understand for the government.
Oh, right. Okay, that's good.
So
that's good.
They can download a couple of those there if they want sort of any more information. Which is pretty handy, and obviously I'm sure that will sort of update as changes
as it goes on there, mate. If you've got those links accessible, if you could email them to me when we finish the call, and then I can post them on the social media post. So if anybody out there has got any questions, they can just follow those links and get some more information. Daniel, just one last thing before we go. You mentioned one of the things that was mentioned in that article was that it's the stimulus package isn't broad enough, and you mentioned that we agree nothing's ever perfect, but it's definitely a great initiative to get things happening. You mentioned that there'd be a couple of things that you might do differently or add. What are just a couple of things maybe that if they asked you, what would you suggest that they do?
I think obviously the market we play in is first home buyers. So it's probably around, how you can get access to that $25,000. It's one of those things that's probably not going to be available, until construction starts, that they can draw down on that. So it's not something that, we can really put towards a deposit to help somebody, get started more easily. We talk about housing affordability, an extra $25,000, which we could add to their deposit to get started. That would actually, help massively. Whereas, we can't, we at the moment, we're not in a position to use it really for that. So certainly helps as $25,000, that they're getting for nothing. But so I think that would, I'd love if, we're able to use it for that, similar to what we can sort of do with the first homeowners grants and stuff like that. So, but obviously this will be a bit different. Outside of, that's probably, the main one. It could even, potentially it could even be something, maybe that was tiered for first home buyers, in different states as well. There's some states that, maybe they don't need the whole 25, to be able to actually, get that process started. Someone in Sydney, it's definitely harder to get into the market than it is someone in Adelaide. It's just the nature of it. You're buying a property, potentially you can get into a very, very similar home between 450 or 500 in Adelaide. Sydney, it's probably 750. Such a huge difference, and yet the wage difference between those people is probably minimal, right? So yeah, I mean, besides, I think they're the main ones. Outside of that, I think it's reasonably fair. Overall, I think they've done a pretty damn good job to do it so quickly and get it through, so that we can boost this economy.
Mate, I couldn't agree more. I think they've done an amazing job, and I'm not politically motivated or affiliated by any particular party, but I think the government has done a great job getting through this situation and what they've done. It's really good for the critics with 100% vision in hindsight, but he's damned if he does and he's damned if he doesn't.
Yeah.
So I think I agree with you. I think they've done a great job. Daniel, it's been an absolute pleasure, and I really, really appreciate you taking your time to have a chat with us and clearing a few things up. As I said, if you could forward those links to me, which I could post, that would be great. Mate, again, thank you very, very much for your time. Enjoy the Queensland weather. We are very jealous because it's bloody freezing here in Adelaide. Thanks very much. My name's Con. I'm the Conversationalist. And until next time, bye for now.